Okay, so SPX, we're on a monthly chart. Now, the most obvious thing that comes into play is significant structure support that you see right here that came in July 1st of 02. There's August, September, October. We then did a double bottom retest March of 03. Right down here around 770 low here, 775 low here. The retest right over here, 788. And obviously that was the beginning of then the 4 to 5 year bull run. Market rallied right back into the 1600s, 1550s. And DST clients, we talked about, a long-term sell right there. We had SOS4 short entry signals against previous triple top structure resistance. You'll also recognize that over here on the left as kind of an ugly ascending wedge pattern or a bull pennant. Bottom line is we roll into triple tops with low-to-low trendline extension right there. Okay, and then once we attained that previous structure resistance, we go back down, we make a new structure low followed by the outside return lower high. Where did this lower high exist? Look left. Previous structure support becomes resistance. And from the swing low right here, March of 03 to October 07, what took over 4 years to build, basically has been given back right here in less than or a little over 1. Again, psychologically speaking, this is one of the reasons some traders prefer to be short rather than being long. Okay, so let's look at it purely from technical perspective. I know it's challenging right now not to look at CNBC and the news and all of the doom and gloom and whatever, but as traders, you trade what you see based on the technicals. All a trader needs to run their home-based trading business is volatility and volume. As long as there are markets that are moving that you can get in and out of, there's profit available. Okay, so don't get caught up in all the funk. Remember, garbage in, garbage out. Got to keep yourself focused on the technicals. Okay, now let's look left right here and let's do a little analysis on this guy on the monthly. We're going to roll from the hard left side right there. We're going to drop in the extension. From that swing low, the market drove to this impulse high. Then we had a 382 retracement to this higher low. You'll see that the 1618 price extension held that price rally. We're going to take the swing low right here. I want to measure the value of that impulse move. And then I'm going to take this 1-to-1 measured move and drop it in at that swing low. And you'll see that 1-to-1 symmetry at the 1618 price extension. These amazing Fibonacci things work any market, any time frame. So again, that's a point of technical confluence. We have a 1-to-1 symmetrical move that terminates at the 1618 price extension of the initial impulse leg. The market rallied into this price point and again put in an ascending wedge bull pennant look. We had a triple top test. I'm going to pull this down now to the weekly and we'll look again back at that exact same price point. Okay, so there's the 1618. Now, inside of the weekly, we want to take the swing low right here, and then we drove to this impulse high. The market pulled back down to that higher low. There's a 127 price extension. We're going to take the last leg right here prior to the turn. There's swing to swing. And now you're starting to see all of this confluence coming in on the lower time frame. And this doesn't even include the dailies. Now, keep in mind, we're on a weekly chart. And on the weekly chart right here, you'll see true ranges at around 45 to 50 points a week in the S&P. We've got a 1546 versus 61. Market rallies into that price point. And again, see the ascending wedge right here. You see range contraction as we start to tighten up, trying to make its move, can't do it, and finally, boom, right here we roll over and we break structure. So the market here puts in a lower low on the weekly, taking out the previous swing lows that occurred here, here. We make a new structure low followed by the outside return lower high. Where does the lower high exist? Look left. Previous structure support becomes resistance. And then we start the sell-off. Now let's come back over here on the right side. The sell-off, you'll see right here, rolls down into beautiful symmetrical double bottom, triple bottom, high-to-high trend line extension, and then we finally get the impulse move, and you can see volatility tames significantly. 03, we're at 23 points a week. You know, and even today, after the volatility in the fourth quarter has settled considerably, we're still at 30 points a day on the S&P. Here we had weekly ranges, 22 points a week. And again, DST traders, this is when we talked about, 8 to 12 point intraday volatility, literally. So a 15-point move was a monster move for years. Now it's 50% of what we expect. All right, so we continue. We rally, we rally, we rally. We get right back up, and then we see this beautiful symmetrical double top. And again, as we look left, we take the swing low to this impulse high, prior to this higher low. And you'll see we've got the 127, 1414, right back at this price point. So we go to the 127, 1530s. We put in a double top. We pull back. The previous swing low holds. We then rally again. 1618. And this level holds. And again, we roll over to new structure lows. All right, now let's go look down here. And you see that we've got a symmetrical double bottom that's forming. The 771 level we're pulling in as we look left from a pure structure perspective. So that called significant lows. Now let's take a look at the last leg of the move here. We went from a swing high to that new structure low. We then rallied to this outside return lower high before driving to this lower low and this outside return lower high. And now we're looking to retest that previous swing. Okay, so you'll see a couple of things. Number one, we've got a 1618 at a 127. If we get through 770s, then there's a very solid technical reason to see a move to 550s on the S&P cash. Okay, now over here on the right side, again, note the descending wedge. Here's high to high trend line extension. Here's horizontal structure support right at that previous. And again, you see a bear pennant. The previous 3 turns that we've seen. 800 turn prior to the rally to 1550. Same descending wedge pattern. The 2 tops both ended in a bull pennant ascending wedge with a double or triple top. And now you see it again right here. Okay, so again, significant price point. Now let's go one level lower to a daily. And now as we look at the dailies, we're going to take 2 different swings. Clearly, the most recent move has been from that swing high to this new structure low. And you see the 127 extension down at 767. I'm going to edit this, pull in the 1414. And again, you'll see the 1414 extension of the most recent move is hanging out right at the most recent 2009 lows. And actually, that's probably a 12-month low right there. All right, so 127 extension down at the monthly, 1414 at recent daily lows. Bottom line is 747, high probability, especially we take out today's lows. We'll see acceleration down into that area. And then again, we'll take a look at SPY, diamonds, QQQs for possible options plays on the buy side. Okay, if we get through that, again, a lot of technical initial drop probably to 720s. Then we'd see a probable outside return lower high, opportunity to jump on the trend and head it south. So again, focus on the technicals. Trade what you see, not what you think.